It's the first one for the week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channels HQ. You're welcome to the program. I'm Ladi Williams. Let's kick off your morning now with the markets. We see U.S. soybean futures climbed to a 6-week high. Last week, soil futures reached their highest level since June, buoyed by strong energy prices, along with optimism about demand from China. Wheat and corn followed broad strength in the commodities sector as the dollar softened, in theory, making U.S. grains more competitive globally. January soybean futures SF3 settled up 25 cents at $14.62 for a quarter of a bushel, after reaching $14.65 for half a bushel. The contract's highest level since September 22. Benchmark December soy oil BOZ2 touched its highest since June 10th. Soy oil is used to make up biodiesel fuel. Prospects for China to ease some of its COVID-19 restrictions lent support to soybeans and other markets, despite lack of any announced changes. China is the world's largest soy importer. And to the oil markets now, oil prices fell more than $1 a barrel today after Chinese officials on the weekend reiterated their commitment to a strict COVID containment approach, dashing hopes of an oil demand rebound at the world's top crude importers. Brent crude futures dropped $1.20 to $97.37 a barrel in early trade after hitting as low as $96.50 earlier. U.S. WTI crude was at $91.24 a barrel, down $1.37, dropping to a session low of $90.40 a barrel early in the session. 4 Federal Reserve policymakers last week indicated they would still consider a smaller interest rate hike at their next policy meeting, despite a strong jobs report data. And delegates from nearly 200 countries kicked off the UN Climate Summit in Egypt on Sunday with an agreement to discuss compensating poor nations for mounting damage linked to global warming, placing the controversial topic on the agenda for the first time since climate talks began decades ago. The agreement set a constructive tone for the COP27 summit in the seaside resort town of Sharm el-Sheikh, where governments hope to keep alive a goal to avert the worst impacts of planetary warming, even as a slew of crises from a land war in Europe to rampant inflation distract the international focus. At COP26 last year in Glasgow, high-income nations, including the United States and the European Union, blocked a proposal for a loss and damage financing body, instead supporting a 3-year dialogue for funding discussions. And redesigning of Naira is still a major topic of discourse in Nigeria's economic space. Conversations have been around balancing the pros and cons ahead of the 15th of December, when it should be in circulation. Our business correspondent, John McQuarrie, presents both sides of the conversation in comparison to a similar attempt by India in 2016. Take a listen.
200, 500 and 1,000 Naira will wear new looks from the 15th of December 2022, when new notes are expected to be in circulation. Nigerians will, however, have 6 weeks to the 31st of January 2023 to replace the old notes, which will cease to be legal tender by the deadline.
The redesign of the currency will help.
Since the announcement by the Central Bank of Nigeria's governor, Mr. Godwin Emefiele, there have been varying perceptions and expectations. For Amarachi John, a student who needs petty cash for household trading, she expects more value.
If so far the value of the money you guys are bringing out now, it's worth more than this. Like, if the money can go a long way, then it's a very nice thing.
There are other Nigerians who are optimistic about the impacts.
Many persons have been able to keep money for elections and so many other negative things. We now find it hard to bring out.
The ones how they decide the GP tank and so on and so forth there will come back to the bank again.
For historians, this move by the CBN sends them down memory lane to 2016. In India, the government had set November the 8th, 2016 to 30th of December 2016 to phase out all 500 and 1,000 banknotes of the Mahatma Gandhi series and replace them with new 500 and 2,000 banknotes. The motive included seizing undeclared income, curbing corruption, ending black money, among others. The reasons are similar to the objectives of the CBN, which include mopping excess currency in circulation, security reports on counterfeit, and curbing the spread of cash for elections.
You're going to have more than one.
Economist Mr. Bismarck Rurani was one of those who first shared his thoughts on the redesigning of the Naira. He notes in the release that these objectives may not be achieved through this strategy. In his words, however, to the extent that economic agents, especially market women, in the middle of December will be constrained to exchange goods for a currency that will cease to be legal tender in 45 days, it could discourage them from accepting the old notes and therefore will reduce aggregate demand and affect the supply of goods. In India's case, the wealthy sold their currency at discounted rates, resulting in a fall in value of the rupee. Naira hit a record low about 48 hours after the CBN's announcement. The downward trend has continued, and in the parallel market, which is more available and accessible, the Naira has gone from 740 Naira for a dollar to more than 840 Naira in less than a week.
We have a currency that is rapidly deteriorating in value. There's a tendency to move from that currency into other currencies, or to move from that currency into other asset classes. But in this case, we have seen a shift, a move towards other currencies. And the natural choice is the dollar.
In India, counterfeits were detected in the newly printed currency within a month of its release. Abrupt withdrawal of cash hurt the farming and industrial sectors. This may be what the chairman of Maltov International Market in Lagos, Nigeria, Mr. Shehu Usman, means when he considers the impact of the decision on farmers.
Some of our farmers that doesn't believe in bank, we have a lot of farmers too here that doesn't believe in taking money to bank. One, because of their religion, Islamic, they said they don't want interest, so they rather keep their money at home.
These consequences may be what the Minister of Finance, Mrs. Zainab Ahmed, referred to.
Part of the reasons that was advocated is that's one of the ways to mop up liquidity to manage inflation. But there are also consequences that we're also looking at. What would the consequences be?
The decision by the CBN has not been totally condemned, as some of its stated reasons, which connect to reducing money politics and giving the Apex Bank more control over money in circulation, has received nod. However, many economists are curious about the timing, as elections are imminent, as well as the costs of printing the new notes at a time when global headwinds are biting hard. Ini John Mekwa, Channels Television News.
Still making the headlines. Naira, right now, headlines at parallel market rates hit new low against the US dollar and other top currencies. Let's talk to Femi Onokarena, MD, Knows Ananke Solutions Limited, joining us via Zoom. Great to have you on the program. Good morning.
Good morning. It's great to be with you this morning.
Yeah. So we see the Forex market here getting a lot of attention right now. Is this really about the Naira redesign or just speculation?
One of the things that we need to understand as a country, as a people, is that what are the factors that affect the value of a currency? We have the supply and demand factors. We have sentiments and market psychology, and we also have technical factors. In the case of the Naira, right, there is a supply and demand edge, but normally supply and demand is supposed to be driven by productivity. And unfortunately, most of the demand we have is regarding edging of funds and storing of value, not to produce anything or to actually have trade with the demand, but just to store some value, in the USD. And sentiments and market psychology is further driving all this, which means that most of what we have in terms of the current exchange rate is driven by speculation. If we were to ask what the quantum of demand of the USD is used for productive venture for actual trade, you'll be shocked that it's quite minimal, and that really affects the ability of the Naira to gain any sustainable value or retain any strong presence against the USD. it must be noted that redesigning the currency, number one, it's a normal thing. It's something that is done in different phases, different times, across different countries. So it's not an issue. The reason this one is coming up as such an issue now is that we actually need to redesign it. It's a need for us, not just a norm for us. It's a need for us because the excess liquidity is driving inflation beyond manageable levels. And whatever the CBN does in terms of increasing interest rate, or is not going to stem, the free fall, that we are experiencing. And if the CBN is not able to mop up available liquidity, then we are going to have, continuously spiraling, inflation. So the redesigning is being used as an opportunity by many to fuel speculation and further devalue, the Naira. One of the questions I like to ask people is, we do our transactions in Naira. We do our things, we buy stuff in the market in the Naira. So why is your currency of transaction, currency of trade, why is it different from your currency of value? Because the actual value you're getting from the goods and services, right, you pay for it in Naira. But then after you have done your transaction in Naira and receive that value, you take that money, then you convert it to the USD, which means that, you've dollarized the economy. And that's something that, we need to take a strong look at and reduce our propensity to depend on the USD.
Right, and we've seen other countries like, Ghana and Egypt, they're struggling with currency devaluation also. Would you say the dollar is the problem here?
In my estimation, I think you asked a very, very important question for the whole world to consider. The dollar is the problem, and I'll give you a couple of reasons along the line of thought. Number one, what gives value to the dollar? The dollar's premium backing is the U.S. government, faith in the U.S. government's ability to redeem. So basically what we have is that we have a currency that's a sovereign currency, to a country, also having the dual role of being a global currency. Now, this means that the U.S. has an unfair advantage. The dollar has an unfair advantage because each country within its sovereignty will design policies that would help its own economy before it talks about helping the rest of the world. But if everyone else's transaction and trade is leveraged off the USD, then everybody is at exposure. If they make good decisions in the US, it affects everybody. If they make bad decisions, it affects everybody. So the US Fed, right, raised interest rates and from like 3.75 to 4% and strengthened the dollar. It is not a secret and no surprise that across board globally the dollar became so strong compared to every other currency, including the euro and all the other major currencies of trade. So the dollar we must face as as the albatross in the room, that the dependence on the USD, right, and the sovereignty that the US has over the USD, there are issues that we need to balance out, especially for consuming economies in terms of trade and transactions. That by the side, the Egyptian case that you referenced, Egypt decided in March 2022 to remove the fixed rate policy, which is similar to what we have here in Nigeria. And based on that, they had a 20 to 25% devaluation of their currency. Ghana's situation is a bit different because Ghana's free fall is more driven by poor utility resonance from their debt profile. Nigeria has a curious case in the terms that our fixed rate and our black market rate, the parallel market rate, the black parallel market rate is like 100%, the fixed rate, which is really abysmal. It does not reflect reality in terms of the true value of the Naira, with respect to the dollar, because you ask yourself the question, what is the basis? Right, what's driving the demand if we are not a dollar, economy, and we're not leveraged to the yield?
All right, but would you say it's time to depeg, from the dollar? And if a country actually takes this step, what could actually, what are the effects of actually depegging at this point?
Depegging from the USD is going to be difficult because, Bretton Woods, IMF, the rest of them, they've closed all of us up in this circle, and there's very little wiggle room for the rest of the world. But what we can do is we can have a phased management in terms of seizing control as a sovereign nation, right, over our own currency, over our transactions, over our destiny, and the West will fight back, as we have seen that they are fighting back in the instance of the BRICS trying to set up a currency of exchange, right? And the current war going on with Russia and Ukraine, and all the roadblocks and economic stumble blocks that they put in to sustain and protect their own positions. What we can do is, first, we need to reduce our dependence, right, in terms of debt and aid on on the US, on the West, such that when they want to give you economic sanctions, right, they also have a feedback that you have some local control. We also need to build our local productivity. Part of our issue as a country is that we have acquired the taste for foreign things, and even when we produce things in Nigeria and that are of good quality, they can be used, we often interpret them in terms of dollar references, in terms of Western references. So mentally, psychologically, just like I said about sentiments and market psychology, influencing value, we are already devaluing, our position. So we need to create instances where productivity is driven by the Naira. Like I said, you go to the market, you don't buy your stuff in dollars. You don't buy tomatoes in dollars. You don't buy your bread in dollars. So why are we so fixated on the dollar? Why do we peg? If we're trading in the dollar, then it would make sense that we'll monitor it. We'll be concerned about what the US, Fed Reserve is doing. But if we are trading in Naira, then demand for the Naira, the value of the Naira, which is one of the things that we hope that the redesigning of the currency would achieve, can actually be stimulated.
So much ado about the dollar, but some have recommended here, floating the exchange rate, for the Naira. And we see what's happening, with Egypt. They also, told that path. But to actually float, or to run a successful, fixed rate system, you need a strong reserve. So how do we make this happen?
Floating is a very, very dicey thing to pursue at this point in the global economy, in our local economy. Floating, if we're complaining right now about the exchange rate as it is, that the dollar is moving to 1,000 to the Naira, I can assure you that it's going to be 2-3 times more than that if we decide to float. Most people like to focus on the demand supply end, and they say, okay, look, let there be free availability of USD. And then the question is, what brings in the inflow of USD? You must back it up with some local productivity. It's value exchange. So what is the value exchange? What value are we bringing to the table? We have very low productivity. We have legacy infrastructure, deficits across board. We have policies that need to be retweaked and rejigged. We are not in a state to assume that we have the ability for a free float. It's going to be a lot more difficult if we do a float at this point, than at any other time, and we would in fact have more issues than Egypt experienced when they did their own floating situation. In my opinion, I feel that we can have a structured play. It's going to be difficult, but in a structured play, we have what the CBN was trying to do before, which is a managed float before some global economic issues came up. You would recall that as of 2019, the economy was moving up. We had serious, strong projections from IMF and the rest of the other economic observers until COVID-19 came and really shuttled all plans. And then starting this year again, we also had the same issues. We're trying to build up 2021, the last quarters of the year. The economy was pushing, and then we had the Russia-Ukraine war. We had our revenue challenges in terms of oil theft and low receipts on oil sales. So what we need is to increase local productivity and try to plug the infra deficits we have here.
Right. So much to do now, and hopefully, we don't get more pressure, going into December. Thank you so much, Femi Onokere, the MD, Sananke Solutions Limited. It was great having your perspective.
Oh, thank you very much. Thank you.
All right. So after the break, we'll look at economic concerns weighing on business leaders ahead of the 2023 general elections. That's our next conversation. Just stay with us. To our next conversation now. In recent times, Nigeria's economy has been characterized by recessions and persistently low growth. Electioneering is in full gear right now for 2023. Let's look at what business leaders are worried about leading into the elections. Join us now, Gbemisola Alunge, Senior Public Policy Analyst at STARS. Good morning, Gbemi. Great to have you.
Thanks for having me. Good morning.
Yeah, so quite a crucial time, in any economy, the pre-election year. What would you say, business leaders, should look out for, talking about signals for an administration that's serious about reviving, this economy?
Yeah, so I think one thing that people would look out for or should look out for is just an improvement to what is currently existing. So Nigerian currently has, for the last 8 years, we've had very low growth and 2 recessions in just the space of 2 years. Inflation has been super high. So inflation at the moment is 23%. For food, inflation is even much higher. People are also looking to the government to see how fiscally prudent it is in managing its finances. So a government that continues to borrow and has high debt interest payments relative to its revenue signals that a lot of money that's going to come into the government, especially in foreign exchange, will be going to debt payments. So things like that are just what people would want to see how the next president or the next administration would look to fix. So first thing is, how are you planning to generate growth in the economy? How do you plan to improve the economy? How do you plan to solve unemployment? Because if the economy isn't growing, if the economy is in recessions over and over again, what that means is that companies are going to go bust. A lot of companies will close down and unemployment will keep rising. So what people would want to see is how the government plans to improve the existing crunches and the existing negative situations that people are just faced with. This time is different because there are times when people wouldn't really focus on GDP growth. I mean, when you're saying that there's some critical issues that would border on like consumer behavior more than others. So for instance, you'd hear people speak more about inflation and how prices of everything is just increasing. This year alone, diesel prices have tripled. So people are focused on how do you plan to reduce the cost of diesel so that I can run my business a lot less than I'm currently running it. People want to see how do I get foreign exchange cheaper, or how do I even get it at all? So because in some cases you can't even get foreign exchange because of the high demand and just low supply in several quarters, and just restrictions on the official side. So things like that are just what people need to focus on now, and people would be gearing to hear what the presidential aspirants want to do about it.
Yeah, we were getting a lot of manifestos rolling in at this time. But how are consumers faring through this low growth economy?
It's very difficult. It's very difficult for Nigerian consumers. Like I was saying before, people would always pay attention when it has to do with like their pockets and how they live their lives. For instance, you wouldn't hear as many people revolt against like how the excess crude account is being spent. But when people hear that, fuel prices are increasing, people come out and they riot. People come out and they basically ask for ask for better. It's the same way Nigerians have been plagued with persistently high inflation. Inflation in Nigeria now is decades high. So people want to find out how the government plans to reduce those prices. And why is inflation so high? Different things from like cost of energy, insecurity for food, farmer headers crisis, just different things that have just caused, prices to go up significantly. So that's something that Nigerians would want you to fix at this time. At the moment, Nigerian consumers are not even faring well at all. I mean, you and I can probably relate to the fact that food prices and just prices of everything in general is higher than usual. So Nigerians are not faring well at all.
Yeah, quite a tough time, with squeezed incomes, and globally, it's also a problem most countries are going through. But Nigeria's crude oil production is the lowest it's been, in the last 30 years due to theft and, vandalism. What repercussion has this had for business leaders, and what should they keep in mind, when planning for next year?
Yeah, so one thing that, one impact that has had is that it has caused, the government's revenue to reduce significantly. So, and also caused, a reduction in foreign exchange. So the government earns foreign exchange through crude oil sales and all that. But where the government isn't earning enough because it's not producing enough, that means that it has to continuously the government has to continuously ration the foreign exchange that's coming in. Earlier in the year, the CBN had mentioned how they hadn't gotten any dollars at all this year from the NNPC, and that's because any dollar that the NNPC gets, it uses to pay subsidies, and then it's not remitting much to the CBN. And now the CBN at the moment, because of low foreign exchange in foreign investments into the country, the CBN has had to be the main provider or main supplier of foreign exchange to banks. What that means is if this situation of oil is not fixed, this crunch and this low supply of foreign exchange in the Nigerian space will continue. For foreign investors as well, what this means is if you see the CBN doesn't have that much dollars and there's a bit of a back and forth between the CBN and the NNPC, what that means is that this supply situation would continue. So foreign investors do not want to come in. I mean, we saw earlier in the year how airlines had claimed, they were owed a lot, billions of dollars, really, and were unable to repatriate their funds back home. So no investor wants to come in and realize that, I can't take my money out because, the government is just not getting enough foreign exchange and all that. So that's what businesses want to find out now. That's what businesses are looking out for. How can I import things without having to go through the hassle of getting foreign exchange from the black markets? Or even if I'm going to get it from the black markets, how are you stabilizing these prices on the official side so that there's an impact on the on the parallel side. So those are the things. Right now, it's not looking good for anyone looking to import anything into Nigeria, because just after the announcement of printing new bills, the foreign exchange increased again. I mean, the foreign exchange rates increased again. So those are things that will just continue to happen. And until this oil production situation is fixed, it would even get worse.
And obviously, we see COP27 on at this time. I'm sure they don't really want all that oil, all that oil money at this time. But, Nigeria's fiscal deficit, has increased about 4x since, 2016. What do you think businesses now should actually look out for and prepare for what might be coming, in the next administration?
Yeah, so, I mean, it's going to be a really tough one for the next administration because, I mean, as Nigeria's fiscal deficit continues to increase, there's a lot of posturing from the foreign investors and foreign lenders about not wanting to give Nigeria money anymore. How, I guess, Nigeria doesn't presents itself as the best person to lend money to at the moment. First, it was from the Minister of Finance mentioning that there might be some restructuring going on, to Moody's downgrading Nigeria's rating, and just different businesses have even felt the impact as well. By just being in Nigeria, regardless of how well your business is doing or how badly it's doing, investors sort of are skeptical about, investing in Nigeria. So that's the thing, right? Once the government has this negative outlook, or this negative investment outlook or lending outlook, it sort of spreads to all other businesses. As the next government comes in, borrowing will be more difficult and more expensive. So the government has to find a way to plug in those revenue leakages, find ways that we can earn more. I mean, our fiscal deficit has increased by 4 times since 2016. It is not looking good. Like, we keep borrowing, and we've been borrowing so much. Now we've gotten to the point where our debt repayment is more than revenue. So the government is borrowing more to repay existing debts. That's not a good look until they increase revenue again, until revenue is back to normal and we're able to fix and repay our debt as usual and still find money to sort of develop the economy. It would look bad for businesses because just by being in Nigeria, they are already getting negative outlooks. Banks and even large organizations, large conglomerates doing business in Nigeria have been downgraded by rating agencies. And until the revenue situation is fixed, that will still continue to have impacts on Nigerian businesses.
And we still have the, debt servicing issues. So what can businesses and consumers, expect going into an election year?
So yeah, I mean, at Steers, we're all about providing data and insights to Nigerians. And one way that we're doing that is by not just giving people, information about the economy, but also letting them know about the elections coming forward. So we've launched our Steers election site, which gives people information about, candidates. And one big thing about this site and what gives it an edge over others is how granular it is. Now you're going beyond just finding out who the presidential aspirants are, to finding out who the House of Representative aspirants are, up until their polling units. It's very difficult to find information about anything outside of presidential or gubernatorial. It's difficult to find information about them. So right now, what Nigerians want to know is who do we vote for in 2023? There's a lot of political awareness, and one anecdotal evidence of that is just the increased voters registration numbers. So at the moment, 94 million people are waiting to vote in 2023. And one thing that they want to find out is, everywhere you hear people say, right now there's a third force, that's a third major political party. But what you hear in some circles is how, it's not just about being president, who will be in the Senate, who will be in the House of Representatives, who are the people that, would help the president's vision come to life. And that's what we're trying to shed light on at Steers. Right now, from the Steers set election sites, you can actually find out who are the people running for House of Representatives up until the different ward units. If you're from Delta East or Delta North, you can find out who the different people running for those House of Reps positions are, so that you're better informed and so that you make better choices in 2023. So we launched the site today, and what we're focused on is KYC for everybody. Know your candidates. Who are the different candidates that you believe would, push your mission forward? And beyond just telling you the people running, we go a step further to actually telling you, what party does this person belong to? How old is this person? Has this person been in elections in the past? How has the person fared? So just basically helping you to make better choices by focusing deep and just drilling deeper, not just the presidential level this time, not just gubernatorial elections, but up until even state House of Representatives, so that Nigerians are making better decisions across all levels of the elections this time. So that's what we're focused on, and that's what businesses should sort of pay attention to. And I guess we're here to provide them with the data, and we've already done that.
I guess that's a new dimension there for KYC. Know your candidate. Thank you so much. I was Bimisola Alonge, Senior Public Policy Analyst at Steers. It was great having you.
Thanks for having me.
All right. Let's see what's happening now in the FX market there. Let's get a grip of what's happening in the official window, talking about the FX market. Let's get that market details, see how it played out there. We see the FX spot there. We're looking at 420 Naira there to the dollar there. We saw a change, a week-on-week change there, up 16.18%. And the forwards, we see that also decline there, 22.95%. We see the futures there, that's also declined about 74.4% week on week. Talking about last week's performance at the official window there. FX derivatives there at 52 there, down 72.24%. And we see daily average there, 84 for the FX spot market, forwards 0.09 there, and futures 10.45. Talking about the daily average for that market. Now let's see what's happening in NAFEX FX rate there. See 441 Naira to the dollar. Even though we're seeing a lot of volatility, talking about the unofficial window right here. Some analysts say it's still quite rosy there, but we see a 0.34% decline there at the chain there, 443 Naira to the dollar. Let's bring in Tobechukwu now to bring us up to speed on what's happening in the market. Hello, Tobechukwu, great to have you.
Hi, Larry, thank you for having me.
Yeah, so tell us, how's the market looking now?
The market today is trading on a very muted note. People are still waiting for some interventions from the CBN to assuage the appetite for FX in the official market space. For the fixed income market today, the sentiments are generally bearish, given the low level of system liquidity. We've seen a lot of people owning their bonds, looking for opportunities to sell them off at profitable levels, while for the treasury bills market is largely trading on a quiet note, as market participants are currently strategizing for the Nigerian treasury bill auction that is scheduled to hold later this week on Wednesday, where 198 billion naira is on offer across the standard tenors.
All right. Well, I guess it's still quite quiet, in that market. Thank you so much. That's Tobechukwu Ikpe, FX dealer at Access Bank, bringing us the details in those markets. Thank you so much.
Thank you for having me.
All right. So we'll take a quick break. Now, when we come back, we head on to London. That's the moment. To stay with us. This is Business Morning. Welcome back. Let's head on to London now. We have Juliana standing by right there. Good morning, Juliana. So Jeremy Hunt is about to set out some tax rises. So much, happening in the UK right now. We're still going to get Juliana bring us up to speed, but we're still expecting a lot of data coming out this week for the UK. We still have that black hole they're trying to fill right there. Tax rises on the horizon with Jeremy Hunt, the new finance minister, projecting that tax rises are going to happen, in the UK economy to try and close that gap that they have with the finances and, bringing the UK economy that's been quite volatile for a while now with the change of government so fast. So I think we have Juliana now. Juliana, good morning. So we see, Jeremy Hunt set out tax rises and spending cuts, totaling about £60 billion at the autumn statement, under our current plans. What are you hearing about this?
Good morning, Ladi. Yes, well, we know that the global market, particularly investors that are interested in the UK economy, are all gearing up to hear this highly anticipated autumn statement, which is due to be delivered on the 17th of November. There have been wild conspiracy theories in the media, but I think we got our first glimpse of what could potentially be in that statement over the weekend, because the Prime Minister, Rishi Sunak, has given his first interview since becoming Prime Minister. He gave that to the Times, and he said, look, we are going to try our best to be as compassionate as possible, kind of doubling down on the statement he made in the House of Commons during his first PMQs. But he said, look, the government just cannot do everything. And I think it's quite silly of people to expect government to do everything. We are all going to have to pay for a series of spending, no less than what we spent during the COVID-19 lockdowns. Furlough comes to mind. So there is this £50 billion black hole, and Jeremy Hunt has got a lot to do to try and plug it. And now the debate is how much is going to be on cuts to public spending and how much is going to be tax rises. Now, during the interview over the weekend, the Prime Minister failed to declare whether or not he would be sticking to the 2019 Conservative manifesto, which did state that there would be no rises to national insurance, income tax, and the higher threshold taxes. He said that he couldn't make that promise now. So there are suggestions today that perhaps there would be a cut of about £33 billion in public spending up until 2027, 2028. And of course, there are going to be fears about this. Where are these spending cuts going to be? Is it going to be in education? We know that teachers are already thinking about having strike action. The NHS, nurses, I believe, are being balloted today about whether they'll be striking over pay. And and elsewhere, because the levelling up project seems to have been abandoned, and that is really the support from the Labour Red Wall that got the Conservatives into power. So there is lots to discuss. We still don't know. We have to wait and see. November the 17th is a long time, but this is clearly what the media in the UK are talking about this morning.
Yeah, right, because spending cuts can be kind of tricky. But what economic moving data are we expecting for this week?
Well, I suppose the only conversation that matters at the moment has got to be about COP27 in Sharm el-Sheikh, Egypt. This is the first time that the UN Climate Change Conference is taking place in Africa since 2016 at COP22 in Morocco. And, you know, we've got over 198 countries represented with their leaders. Rishi Sunak is there. He decided to go there after Boris Johnson said that he would be going there. I think now this is a great opportunity, obviously, Laddie, for Africa to kind of renegotiate their terms with its ailing trading partners, the West. £100 billion, $100 billion of climate financing because of loss and damage was pledged in Copenhagen several years ago. They haven't received it. We've seen all the floodings in Nigeria. It is really time. I do hope that these African leaders will demand. The caveat is they are in Africa, so they do have some heavyweight for them. So that is the main discussion. Then more domestically, on Friday, we are going to be getting GDP figures for the month of September. This is massive. We know the Bank of England have said that the UK is already in a recession. We are expecting that data to show that there was a decline in output. So yes, and of course, lots of market-moving statements. We'll just wait and see what Rishi has to say at COP27 today, but all eyes are on the climate emergency, which is the big topic of this week.
We know the BOE there forecasting the UK going to the biggest recession. So we're looking out for that GDP data. Thank you so much, Juliana. Talk to you later.
Thank you.
All right, let's see what's happening in other markets now. Talking about the crypto space, there we see Bitcoin price remain well above the 20,600 level and 20,500 level. Let's look at the sentiment in the market. The sentiment in the crypto market now we see is about 33 points there, pointing to fear. Been in extreme fear for the longest time, but we're now in fear in the market. 33 points there, fear, showing that, you know, investors are getting a little more comfortable in this market, a little more comfortable buying the dips at this point. Let's look at what's happening with the market cap there. We see the market cap still above the 1 trillion level, down 1.65%. Over the weekend, it did get to about $1.10 trillion, $72.73 billion. That's up 8.78%. The volume traded in the total crypto space, Bitcoin dominance sitting 38.74%. Let's look at the price of Bitcoin. They did have that surge to about 21,000 over the weekend. Weekend was quite green. Talking about Saturday, where we saw that correction downward happening on Sunday evening. There's down 1.150% this morning, $39.56 billion. That's what's traded in the total Bitcoin, talking about Bitcoin volume. Let's look at the Ethereum price there. Ethereum 1,584, still holding that psychological level there, $1,500. It's down 1.95%. Volume, less volume than we had when the markets were surging there, $12.78 billion. Let's look at the top odds by market cap. We see it's all red this morning, down 3.24%. BNB did get to $350 over the weekend. We see Cardano also down 3.41%, and XRP 46 cents. That's down 4.31%. So we're seeing a major correction, you know, in the markets right now. Let's bring in Michael Anachi now, financial market analyst. Hello, Michael.
Hello, good morning, Laddie. Thanks for having me on.
Good morning, and quite a pullback we're having this morning. There are reports that, you know, Binance to liquidate its entire FTX holdings after a recent revelations. Looks like one centralized exchange against another. How are you seeing this?
Yeah, it's a really interesting spat that developed over the weekend. So FTX was originally incubated by Binance, Binance being the largest cryptocurrency trading exchange by volume. So they were incubated back in 2019 by CZ and the Binance team. And so the $2.1 billion deal to basically cash out Binance Holdings was initiated at some point last year, but ultimately that was moved up the ramp. So that the deal was liquidated more sooner, just because CZ noted that there were some peculiarities in terms of what he was seeing in terms of the liabilities that FTX holds. The rumor on the street is basically that FTX doesn't have enough assets to offset their liabilities. Since effectively, there's a bank run on FTX at the moment. So you've seen people from FTX, like the CEO of Alameda Research, the trading part of the firm, come out and say that their balance sheet is strong and they're able to weather the storm. And they can, if CZ wants to make a deal, they'll happily buy the rest of his FTT tokens at $22. So they've come out and they've made a stand saying that they are physically stable. But at the end of the day, this is one of those things in crypto that we usually never recover from. Once there's an impression that that you're not solvent, most market participants don't want to see where that ends up. They start pulling funds because, unlike banking, where there's the FDIC insurance, once your crypto exchange fails, you're ultimately left holding the bag. So no one likes to see these rumors at the end of the day materialize. People rather act rather than be left holding the bag. So you're going to see FTX the next couple of days try and dispel this rumor like they already currently have. So you saw Caroline, the CEO of FTX, of Alameda Research, come out and say that they have $10 billion worth of assets that wasn't part of the news report where their balance sheet was leaked. So at the end of the day, they will try and fight this. The reason why you saw the FTT token slide down is because CZ basically said that they're going to sell. And so at the end of the day, you have billionaires exchanging volatile words at each other on Twitter. And it's one of those interesting things where, at the end of the day, we really do not know how it's going to play out. It could end up being an absolute nothing burger, but that there's higher odds that this is something to be noted and something that should be treated seriously, because at the end of the day, a crypto exchange going bust the size of FTX is not something to scoff at. Most likely they are fine because of their size, but it's something to know.
Right, and when the billionaires are fighting, obviously retail is going to feel, the impact of all of that spat going on right now between, the big investors. What do you think retail should be doing, at this point to create some kind of buffer?
Yeah, I really do believe in diversification of if you must leave your crypto on an exchange, I really do believe in diversification of your risk. So if you must have coins on an exchange, do split them up. Or if you must, you can use an exchange that is reputable and has been here for a long time. Things that come to mind, exchanges like Kraken have been here since 2013, since Bitcoin. So I do really believe the best way out for people in times like this is buy a hard wallet, like a ledger or some kind of infrastructure that doesn't relegate you to needing any kind of financial intermediary. So practicing diversification of funds through different exchanges as well as custodying your own funds is truly the only way to prevent yourself from worrying about something like this. So at the end of the day, retail really should worry about where their funds are. In a bear market, the water comes in and we see who's swimming without clothes. So I really do think the bear market is one of those times where people will get exposed very quickly, and you see how really bad it is. So it's one of those things where you really got to be careful where you're placing your funds. Yeah,
but I got to be very careful there. I guess not your keys, not your funds at this time. But it's a new week, Michael. What market moving data, especially for Bitcoin, are we expecting?
So last week was a pretty frenzy week, and we had a lot of reporting. And so I think this week's going to be quite different. It's going to be a quieter week. There's not a lot on the board, but we do have the CPI readings coming out later on this week. So it's one of those things. CPI readings tend to be the beginning of another leg down. Usually, if the data hasn't been good for the last couple of months, but if we get a CPI number that looks better, you can expect the market to go up. But I really do believe inflation is here to stay. The Fed is not going to. The Fed's not going to change. It's not going to pivot anytime soon unless inflation is going to get entrenched. They really do have to make the market suffer and bleed. And so you're really going to see, no matter what the CPI news comes out, I really do think the direction is down. Because at the end of the day, the Fed is going to act. They have to act unless inflation becomes entrenched. They can't go for a shallow recovery. They can't go for a shallow recession. They have to make it entrenched. You're seeing tech companies lay off people day after day. The next one being Meta, probably going to make layoffs sometime this week. So we've seen all the components of fairing layoff engineers. So I really do think this thing is just starting. The Fed's not going to rip up the Band-Aids now. And the CPI data that we're going to get is just going to be more news to them why they shouldn't be pivoting early. And so I really do think there's more pain ahead. There could be a relief rally, maybe to 25K, but at the end of the day, I do really believe the direction is down.
All right, Michael still sees pain ahead. Thank you so much, Michael and Naji, financial market analyst. Thank you. All right, that's it for the markets, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated. We're going to be going live to the NGX there for the first in-person trading and closing gong. That's at 1:30. Don't forget to join us at that time. And you can also watch our videos again on our YouTube channel. Just search for Channels Television on YouTube. Flip over to videos. You can watch all our other productions. Thank you for watching. I'm Ladi Williams. Bye for now.